All right, folks. How's it going out there? Hope everyone's having a good day and trying to stay safe in this really topsy-turvy trading environment. Remember, OPEX week, I've written about this before. It bears repeating. It is not often the best week for trading. A lot of the systems that we may be used to don't have the same probability of success. You typically are going to have wider price distribution, so there's going to be a broader volatility than maybe one is comfortable with or used to. We're certainly seeing that, right? I think it's fair to say that's playing out a bit today. So I just think that's something to contextualize a little bit. Don't get too aggressive on OPEX week. Tomorrow is VIX expiration. That's when all these vol products expire. That typically is a time where you see some build of volatility as well. So this could continue a little bit. We did break below some important structural levels with today's trading. We'll see if we close above that wall of puts or not that's being built below us here. We can see it's now at a lower level based on intraday gamma exposure levels. These levels updated in near time by the SPX options visualizer. But what's important to think about here is that we've actually pushed below the most active put strike pretty considerably here, right? About almost 20 handles below it. And that tells you there's real distribution happening. Underneath the surface, there is real selling here. So as we consider the impacts of that, I think that's one of the areas where, we could have some continuation. There's a lot of folks that are very, very, very long this market. Talking about systematic funds that are short vol strategies, that are long absurd amount of equities, talking about hedge funds that are very concentrated in the Mag 7 longs. Retail folks like us, similar concentration. I mean, heck, if you're in any kind of market cap weighted index, you're concentrated in the Mag 5, Mag 7, Mag 8, whatever number it is, right? And I think that's one thing to sort of look at. Like, do we see a continuation, and is it led by those same? Today there is a decent amount of pressure in semiconductors and some of these Mag 5 stocks as well, but it's broad pressure across the entire market. There are a few exceptions. Waste management's up 5.1% on good earnings. There's a couple other pockets of strength in the market, but overall, it's pretty widespread distribution across the map. And a lot of this has to do with rate. So I have this on screen for those that are watching my stream. I'm going to just click over here to the 2-year note, okay? Look at that gap down we had on CPI. The 2-year is often seen as one of the proxies for what the market's outlook for the Fed is. This was a pretty big move on that CPI. And while the CPI print itself in isolation is not a big deal, the market is recalculating some of its assumptions about where the Fed's going to go with monetary policy. Now, when rates drop, or when prices drop at the 2-year note futures, rates rise, right? And when rates rise this much, it does give pause to risk appetites, both because you have the equity risk premium moving even lower, and it's like the lowest in 20, 25 years, depending on where you look, making fixed income comparably more attractive. But it also means that some of these longer duration risk assets look less tempting. And this is not a move that's isolated to the 2-year. It's also being seen in the 10-year, which we have on screen here, the ZN contract, and the 30-year, the ZB contract that we have on screen. All those had those same gap down kind of moves. The 10-year's up about 12 bips. So that's a pretty big deal. I think that's one of the things we're seeing that's adding to some of the downside pressure in equity. So I would suggest keeping a close eye on rates, but also keeping a close eye on the dollar. We can see here's the euro on screen. We're going to zoom that out. Again, huge gap down, right, into that print and just really staying around those lows. That's one of the reasons the dollar is so strong. It's breaking out. The greenback is really breaking out. Got the yen on screen here too. We're just going to zoom that back. Same kind of gap down, continuation lower in this currency. So I think between what we're seeing in rates and currencies, that is causing a little bit of recalculation on risk taking, right? We had 14 out of the last 15 weeks with upside. That was like the first time that we had seen that since 1972. It was the only time ever where there was 20% plus upside. That's never, that kind of upside's never happened. It was led by just really 5 stocks. I mean, obviously it's a little more of a complex picture than that, but that was the biggest driver of it, was a concentrated handful. I would, and most other people that are bullish would like to see the market broaden, the rally broaden out to more sectors, industries, factors participating to the upside than just a concentrated few. So I think that does up the ante for NVIDIA earnings on the 21st. I think that's going to be pretty important to see how the market reacts in particular. You have the skew on all these really popular stocks blown out so far into the call side of things that people are just expressing that the only concern they have is missing upside. There's no concern about downside. It's also one of the reasons that the VIX sometimes trades in tandem with the S&P when there's just so much demand for risk in excess of demand for protection. So looking at all that, I think that's why rates are important to watch. Volatility is now something worth watching again, particularly as we approach volatility expiration or VIXpiration tomorrow. We are in OPEX week. Friday's OPEX is going to be a pretty important deal. How we close the week for technicians is really important, that weekly candle. So these are all things that I'll be watching closely, that I'll be talking about more when we do the midweek update, but I'll also continue to watch and observe and share my thoughts on these streams, both on the Traderade Discord and beyond. Now let's take a look at some of the options activity that we have going on underneath the surface today. Got a lot of put flow in NVIDIA here, probably some hedging ahead of earnings. But that's really been lighting up the tape really across the board. And these are short-dated puts. I don't look at, for these unusual option scans, things too far out in the future. So all the ones I'm seeing today are, over the next really 20 days or so. And there's millions and millions of dollars piling into put premium on NVIDIA puts across a variety of different strikes. So that's something to think about. There is some hedging ahead of those earnings. If they go better than expected, of course, that's quite good news. But we still have skew very much towards the call side on NVIDIA. And on a number of these others. Meta is all-time high call skew. Never been this excited about Meta upside in terms of where options participants are. That's their positioning. That's what it says. They don't even consider downside as a possibility. It really is that slanted. It's pretty remarkable stuff if you look at it. Not too much news, just looking across the wires. OpenAI is testing the ability for ChatGPT to remember things, so I guess you got to be even more careful what you put into ChatGPT now. Fun stuff. Now, cocoa almost making another all-time high today. Crude oil continuing to push on the day. It's energy is just such an unloved part of this market. It's hard not to want to bid on some of these beaten up energy stocks, particularly the refiners, where there's some companies that are really making good money. So we can see that second most active put strike moving lower now. 70,000 transacting in what would be the equivalent of S&P futures 4940. That is about where price was drawn to. And we can also see the distribution of volume between the top two calls and top two puts is within 20%. We've got that midpoint on screen there, so a bit more of a balance. Coming up on the last 20 minutes of trading, things tend to get a bit more volatile during that window. So for folks that have shorted this thing and have killed it, not a terrible place to book some profits probably. It's interesting to finally see the top put volume really taking into consideration the lower end of this price range. This was some real selling here, particularly in like the last 2 hours or so. It wasn't just driven by zero DTEs. There was distributive pressures that overwhelmed the influence of zero DTEs there. Let's take a look at the NASDAQ here on screen. It's actually looking comparatively just a little bit better than the S&P right now in terms of its ability to try to sort of make a local, like a microstructure new high. So we'll be watching that. I like to see momentum led by the NASDAQ. I talked about that a little bit earlier, but typically it tends to lead the way in both directions. So if this thing can really pop, I think it could lead the S&P higher as well into the close, but we'll watch. Russell's kind of putting on a similar look here too, right? Putting in an even more convincing high there. Maybe a little bit of short covering there from some of the folks that are absurdly short the Russell, hedge funds. Oil coming off of its highs, but steady here, just above VWAP. And you still have downward pressure in rates, so that is something to keep an eye on too, particularly as we close out this week. There was a little bit of relief here, as you can see a bit in the 10-year note futures. Again, a little bit more volume here, buy side on the S&P. But you can also see that, you know, there still is a decent amount more put buying than call buying here. So I think the big deal with CPI today and what probably spooked the market a little bit was the shelter data. I know some folks have said, don't worry about shelter. It's not a big deal. You know, we can just net that out because it's a very lagging indicator. I would be cautious about just netting it out because we're seeing the price of rent and the price of housing actually rise. And rent, the rate of change has slowed there to about 2%, but home prices are up about 5% year over year. And so if shelter is a lagging contributor to CPI and home prices are now on the rise again year over year, that suggests there's still some more inflationary pressure in the pipeline in that shelter component. And shelter is a lower weighting in PCE than it is in CPI, but it's still something that is going to be watched pretty closely here. So I would say, you know, it's not really the appropriate time to discount shelter and its impact on inflation entirely. I think we should still contextualize it, particularly given that none of the pressure in the housing market has been relieved. We're still at very, very high levels of pricing and rates, which make homes the most unaffordable they've been in about 40 years. So it still matters. And we can see the second most active put strike now moving back above here. The most active put strike coming back to that level we've been watching around 49.40 ES. Just going to zoom in a little bit on the structure here. Maybe not quite that much. To get more constructive, I would like to see some more liquidity building above us. We do see this resting offer just around the hot call. That convergence is pretty common to see, where there's a convergence between where there's a lot of flow and where there's a resting offer or bid. So we do see that little bit of a pull. We also see that bid below us disappearing, which tends to be constructive. So we'll see if the bulls can take it a little bit higher into the close. You still have those decay flows that should give us some supportive bid as well. So someone asked me, you know, let me just go back to the actual question to make sure I get it right here. What stands out to you on near-term S&P options? I noticed the Feb monthly 4,700 puts have sold like 2,200 contracts in the last hour. Yeah, I would say that, it's funny the way insurance works, but often is the case we see people wanting to buy insurance when the house is already on fire type of thing. So there's a little bit of that, perhaps, but I don't necessarily know that it's going to be too much of a driving force here, because we're getting to that point very close to OPEX where that flow will probably have a more subdued impact on price discovery other than just pulling some liquidity out. But yeah, I do think that, you do have folks that tend to get into hedges after they see something play out rather than before. And, maybe that's a little bit of that reflexive buying insurance. You never know why people are buying insurance, though. I mean, most of the time when they're buying S&P puts, it is insurance. It is to reduce value at risk. Sometimes they're making directional bets, too. So it'd be interesting to know, why they're taking that trade and if there's any other legs to that trade. We're climbing right back up to the second most active put strike here. Wouldn't be too surprised if it becomes the most active again. We've got VWAP just right there at the second largest level of gross gamma exposure. So these are two levels to watch as we head into the close here. And I'll put a little music on because why not? All right. That's enough. So I think that, this kind of price action, it's really important to see whether there's continuation. If we see continuation, then I think it means something a lot different. Today, it can just be a pause. Obviously, we do see some pretty big distribution across the board. There's pretty strong selling pressure in a number of different areas of the market, but this can be just a one-day thing. What's going to really matter, at least to me and the way I look at these, is what are people doing tomorrow with these positions as we get closer to options expiration? Are we going to see people continue to roll these calls that are really aggressively positioned in the Mag 5? Are we going to continue to see rolling of insurance positions, which may be part of that 4,700 SPX buy as well, on the put side? But tomorrow is expiration. It typically is the start of a more volatile period in the month, and February seasonality in the back half tends to be problematic for tech stocks in particular. And we're getting right back up there to that second most active put strike. We can see also that that midpoint is gone because, we are seeing pressure rebalance towards puts away from calls. That hot put, that most active put, is the most active option on the chain. And you can see the put call ratio favors puts because there is an asterisk by it. Do I have any refineries I'm considering positions in? Yeah, I'll share some info. It's both refineries and services companies that I'm interested in. One of the that I like is Liberty, LBRT. That's one that I've shared before, and I've written a whole thesis about it on MacroVisor. There is some distribution, there's some institutional distribution iceberging happening up here. Just a little bit of selling into the strength. Nothing to be alarmed about. I look at like over 1,000. I got to see 4 digits on these to really look at it as a potential stopping point. But nevertheless, you do see selling into that strength here. So coming up on the last 12 minutes on the trading day here, we do have some earnings after the bell here, nothing too major, but Airbnb is one of them. We got Upstart, Robinhood, Lyft, MGM, Akamai, AIG, GoDaddy. Be interesting to see what plays out with some of these names. Corsair. DaVita is an interesting one. I enjoy watching these earnings because, you know, when you look at both what they're projecting and what the management's saying, oftentimes you can glean some insights. More liquidity really just coming away below us over the last 10 minutes here. Again, that tends to be constructive for price moving higher. You also see some building above. Now we might stall out a little bit here around this level just because this is a pretty important price area for the market. It is the second most actively traded put on the options chain and just a variance of 5,000 contracts there, so not much. And we could see just a little bit more of that push. But that level, that warm put level, seems to be pretty important. And that really, just seeing that liquidity fade below us, that's just telling us there's less of an appetite for price lower and there's an increasing appetite for price higher. And it comes back to auction theory. A lot of the ways that markets trade has to do with auction theory, in my opinion. I think it's a really important part of understanding why price moves the way it does, just based on supply and demand. Early market on close imbalance, 2.6 billion on the sell side. So that does suggest there could be a little bit of selling pressure here, but these MOC numbers I wouldn't say have a strong predictive value. If we do get drawn down here, I'd be looking at that hot put strike, just maybe 17 handles below as a attractive area for price to gravitate towards. We do see some liquidity building below us here. You can see it thickening up versus where we were and new areas coming in. So this is a bit of a change in character in these last 10 minutes. Folks trying to scalp this thing into the close on the long side might not be a terrible place to take that position off either. I think that might have been the counter move. We'll see how these last really 8 minutes go. And you could see just that really large increase in liquidity as you have so many players that have to settle transactions in the last 10 minutes. So that big band of red is exactly that. And things tend to get a little bit more choppy into that last 10 minutes of trading as well. And so the main screen, if you're not familiar, this is Bookmap. This is showing a heat map of the market where there's been transacting. Then on the right side, you can see the order book. That's the current order book, and you can see where there is resting liquidity. Above is the sell side, below is the buy side. You see the session volume profile where there has been transacting, and then to the right of that, the options column, which shows you the key levels of SPX options translated into S&P 500 futures levels. Pretty handy tool. All this put together gives a very, very helpful view on the market. Let's take a look at the NASDAQ here. Wow, look at that. Just all over the place in the NASDAQ. It is just a absolute high beta machine. We'll just zoom out here. You don't see like the same craziness in the S&P. Yeah, it moves. For sure it moves. But the NASDAQ just has a whole different personality about it. It moves so much more. You do see a pretty decent bid into the close here. Really from like 320 and on. There's been a decent bid in the NASDAQ and in the S&P. Right back up to that second most active put in the S&P like we were talking about. Wow, look at that Russell though. Down like 4.2% or so. This is just madness on this thing. It just got walloped today. So much distributed pressure all day long. Get a little bit of a bounce here, but just small caps annihilated. Really, really annihilated there. Let's see what rates look like. A little bit of reprieve in rates, probably helping equities get a bid here into the close. Pushing above that warm put. Got about 5 minutes left. Maybe we get up to Gamma 2. Maybe we get up to that VWAP level. That would be a decent area of resistance. I was wrong that the long side scalp would end there. We do see a little bit more of a bid into the close. Perhaps some of those distributed flows as we approach expiration from S&P puts losing value, adding to that bid, that upside pressure. 467 stops or contracts stopped out up above here, 457 I should say, as some of these smaller traders are being pushed out. Very nice closing move there. Yeah, there's about 500 share or 500 contract block trade there on the buy side too in S&P. There is some iceberging happening here. It's not a lot, but it's enough. Right back up to Gamma 2. That was the extension that we talked about. We could get past the warm put, potentially get up to Gamma 2 and the VWAP. That's going to be an important level of resistance. Then from there, we've got the point of control and gamma flip level that could act as resistance. Nice little push here into the close right up to Gamma 2. just above VWAP here. And again, hope everyone's had a good trading day out there. I hope that these streams have been helpful to you, learning about how I look at the markets, my process. I'll be doing a lot more of these. I'm doing them on multiple platforms, having a little fun with it. And of course, every Tuesday at 9 a.m., you can join me on Bookmap's YouTube to look at the markets and prepare for the trading day as well. And if you enjoy the visualization on Bookmap, it is pretty awesome. You can get 40% off visiting traderade.com/bookmap, traderade.com/bookmap. Or if you like the S&P options visualizer and you want to add that to your copy of Bookmap, you can do that by visiting traderade.com/SPX. For Bookmap, you get up to 40% off visiting that link, traderade.com/bookmap, scrolling down to the specials. So I want to thank everyone for tuning in. This has been a lot of fun. I'll keep it going for up until the close, of course, but pretty much got to our first extension at Gamma 1. Good job for anyone who scalped that long. Good times, folks. Good times. All right. That's going to do it for me. I hope you all had a great trading day. I'll be back tomorrow. We'll look more at the markets and we'll see if there's any mayhem. Hope you guys have a great rest of your day.